So welcome back to another tutorial session. We'll be continuing on the concept of accounting and the business environment. However, we'll be moving a step further, right? So for today's question, presented here are the assets of Grand Majors Covered Limited at December 31st, 20x7, and the revenue and expenses of the business for the year ended on that date. So we have the listing, and it includes assets and liabilities and revenues and expenses, which we'll dissect a little bit later. The capital balance of the owner was 150,000 at December 31st, 20x6. During 20x7, he withdrew $40,000 for personal use. Required: prepare Grand Major's income statement for the year ended December 31st, 20x7. Prepare the statement of owner's equity for the year ended December 31st, 20x7. And prepare the balance sheet as at December 31st, 20x7. But before we go any further, before we analyze what is included in the various statements required and dissect the different business transactions that we have up top in terms of where should they go and what they are, we want to ensure that we note we have two dates. We have a 20x6 date and a 20x7 date on it. So we need to pay very close attention to what these dates are and what they're saying. But what is required of us is to prepare statements for the period ended 20x7. So a financial year, as we would have talked about in prior video, is a 12-month period, right? It doesn't have to be like a calendar year, because there's a difference between a financial year, accounting year, and a calendar year. A calendar year, as we know it, is January to December. However, in the accounting world, an accounting period, it can start at any point in time. It's whichever month your business started. So if your business started on June 1, your financial year is June 1 of whatever year to May 31st, the day before of the next year. So we see we have a 20x6 information that is useful, and we'll use it as it comes, but be aware that we're preparing statements for 20x7. So that includes information from January 1, 20x7 to December 31st, 20x7. So our requirements, we're looking at doing the income statement, the owner's equity, and the balance sheet. So let's see what those are, about what they talk about and what they include. So our income statement has information about revenues, expenses, and or net income or loss. Our statement of owner's equity, as we would have done before, this is what it looks like. It includes information such as our beginning capital or additional investments by the owner, or net income from the prior statement that we would have done, or withdrawals and or ending capital, right? Or balance sheet, what does that include? The balance sheet has information about assets, liabilities, and owner's equity and capital, and that would be coming from the statement before. All right, so let's look back at the question. Now we're going to be analyzing the different figures that we have here. So starting with the land, what is land, and in which of the statements would it go? Land is an asset, right? And it would be found in the balance sheet, and we're using BS to denote balance sheet and A for asset. So if it's in the balance sheet, we'd see BS. If it's an asset, A beside it. If it's a liability, L beside it. So we already know assets and liabilities go in the balance sheet. Revenues and expenses go in our income statement. So for the income statement, you'll be seeing IS, and then if it's revenue, R beside it. If it's an expense, E beside it. So let's continue. Notes payable. What is our note payable? So this seems as if something that we owe. And what are our liabilities? Things that we owe. I give that away. So notes payable would be in our balance sheet, and it would be a liability. Property tax expense. This is a giveaway. So expense, income statement, it's an expense. The same for rent expense, the same for salary expense. However, salary payable is now what? A liability, and that would be in our balance sheet. Service revenue, by the name of it, it's revenue, and revenue is found in our income statement. Supplies, what are supplies to the business, right? And in this case, supplies would be an asset, and that would be in our balance sheet. We'll go over to the next side. Accounts payable, that's in our balance sheet, and that's a liability. Accounts receivable, balance sheet, but that's an asset. Advertising expense, that's a giveaway, income statement, expense. Building, that's an asset, balance sheet. Cash, same, in the balance sheet and asset. Equipment, same, balance sheet and asset. Insurance expense, giveaway, income statement, expense. Interest expense, income statement, expense. Right? So we have analyzed that information. So now we can go about and do our statements. So the first statement is our income statement. And we're starting here right at this point because it's important. Having the name of the business, the statement that you're doing, and the period for which you're doing, it's very important. So if you don't remember anything else when doing financial statements, always remember we start with the name of the business, the statement that we're doing, and the year, the period for which we're doing it. So in this case, we have Grand Majors Covered Limited. The statement that we're doing is the income statement, and it's for the period December 31st, 20x7. What do we say is included in our income statement? Or revenue and our expenses, and that gives us either net income or a net loss. So we'll start with our revenue. So what was our revenue? If we looked prior, we saw that we had service revenue of 189,000. We had no more revenues, so that's okay. The next thing that comes in our income statement are our expenses, right? And we highlighted all of those expenses. So that's what we'll be putting here, putting all our expenses down, from salary expense to insurance expense. All the ones that we had IS colon in E. So once we've done that, we would have summed our total expenses and we have gotten $114,000. You're seeing two columns for flow and easy readability of what we're doing. Presentation matters, right? So because we have a list of expenses to sum, rather than putting it into a far right column, we created another one and we do all our working out in that column, and then we carry the total to the far right. After we've summed our total expenses, we will now subtract that from our revenue and we will get our net income. So note our net income here is $75,000. And this is your income statement. Let's move on to the next statement, which is the statements of owner's equity. So again, we're looking back. The statements of owner's equity, what goes there? So remember what we showed before. We have beginning capital, we have the additional investments, we have net income, which we just calculated, we had our withdrawals, and we have ending. So we're coming back to the question to pick out those information, right? We have our withdrawals, we have net income. There is nowhere in the question that said that the owner made additional investments in the business. So we have quite a bit of information that we can proceed. So we have, again, the name of the business, the statement that we're doing, and the period for which we're doing it. And this would be our statement of owner's equity, where we have beginning capital, $150,000. plus our net income, we have no additional investments, so we can go ahead and sum that. Then we would less our withdrawals of $40,000 that was said in the question, and we'll get ending capital, right? But why is beginning capital $150,000? We're seeing that there. We remember seeing something in the question about capital for the owner was 150,000 at 20x6. But our beginning capital would be on January 1st, 20x7. So why is beginning capital $150,000 first? What is beginning capital? So beginning capital is what the business would have accumulated from previous year's operations. So therefore, the ending capital for one period is the beginning capital for the next, because the ending capital is the accumulated. It has been accumulated from previous periods of operations. So this is why we're seeing where our beginning capital here, though in the question, they told us at December 31st, 20x6, that was the ending, and it flows over to be the beginning at January 1, 20x7. So I hope that cleared that up for you. Let's continue with our balance sheet. So we're looking back at the question and we're noting all the items that are supposed to be going in our balance sheet. And those items would be BS. And if it's an asset, it would be A. And if it's a liability, it would be followed by an L, right? So again, the name of the business is essential. The statement that you're doing and the period for which you're doing it for. And this is what our balance sheet would look like. And this is the horizontal format of our balance sheet. You can look for other videos where we'll tell you there are two types of format to present the balance sheet in, the horizontal or the vertical format. But in just introducing you to this course, we'll be using the horizontal format, right? And in the horizontal format, it's somewhat like a T account, where on your left side, you have the assets, and on the right side, you have liabilities and owner's equity. And it kind of denotes our accounting equation of assets equal liabilities plus owner's equity. So let's dive in a little bit more. So on the asset side, we would have written all our assets. That would have written balance sheet, and the colon A would have put them on the asset side. Then to our right, we took all our liabilities, we summed them, and what we simply did for owner's equity was, because we had done the statements of owner's equity before, all we had to do was to take that ending balance and have it right there. And we would have had both sides being equal. So this is the end of our video. We would have done all or required, what was required of us, which is the income statement or statements of owner's equity and our balance sheet. If you have any questions, put them below in the comments or send us an email or a DM. Let us know if you really like this video. Share it with someone who you know is doing this course, and remember to subscribe and click that bell if you want to know what our next video is, what will be our next tutorial question. Thank you.